So let's get started. Let's talk about our unicorn entry model. So the first thing we're looking for with a unicorn is our bearish or bullish breaker. Okay, bearish or bullish breaker. So what we want to see with a bearish or bullish breaker, first we're going to talk about a bearish breaker. Okay, we're going to talk about what we're looking for. So we're looking for a high. Okay, we're looking for a low. We're looking for a higher high. And then a displacement of the lows, maybe something like this, kind of like that, right? That's kind of the structure we want to see for a bearish breaker, okay? So we want to see this high right here. This is that key high that we form. We want to see that high get swept, and then we want to see this low down here get displaced. Okay, so this displacement right here is where that breaker now becomes valid, okay? So that bearish breaker is now valid once we have displacement of that low. Okay, so our first low right here. So let's just say you kind of want to see, most of the time, you kind of want to see a bullish trend then turn into a bearish breaker and get that reversal, right? So you kind of want to see price moving up, and then we see that reversal pattern. We know that we're looking for a reversal. Maybe we have higher time frame confluence, that maybe we're in a 4-hour bearish breaker or a 4-hour bearish fair value gap, a 4-hour bearish order block, and then say on the 15-minute we form one of these bearish breaker patterns. Okay, now we're starting to look for that reversal. All right, so let's look at it over here. Okay, I'm going to delete that. So now let's look over here on a 15-minute time frame. Okay, so we're in a bullish trend. Notice how price is trending up, trending up. All right, we formed that first high right here. This is that high I was talking about. Boom. That is our first high. Okay, that's the level that now we need to see price come up and sweep. We need to see price trade above that, grab all of the buy side liquidity above this level. Okay, so that is our point A right here. That's our point A. Right there. Point A. Okay, now we come down and we form a low down here. Okay, so that's going to be our point B. That's our point B. Okay, so now we need to see price come up, sweep the high, and form our point C. So now this is point C. All right, so now we have our A, our B, and our C. So our A on a bearish breaker is going to be the first high, our B is going to be the first low, and our C is going to be that second high formed. Okay, so now what are we looking for? What are we waiting for? Well, now we need to see price trade down below and displace our previous low. Okay, displace our previous low. Once that happens, we're now looking for our lowest down close candle on point A to point B. I'll say that again, point A to point B. Our lowest down close candle in this little dealing range, okay? We're looking on the 15-minute. I see that this candle right here is a down close candle, and it's also our lowest one. So now I'm going to pull out my rectangle tool here from the high of the wick to the low of the wick. Okay, so now that is my bearish breaker block. Boom. Okay, we've got our bearish breaker block. So now when we see price trade back into it, we're now looking for a reaction off of that level. Okay, but here's what's cool is now if we see a fair value gap overlapping anywhere of this bearish breaker block, that lowest down close candle, it's now considered that unicorn model where we have extra confluence in this trade because now we have that fair value gap entry, we have that breaker block entry, we've got a lot going on. So we see on the 15-minute we have this fair value gap formed right here. Doesn't have to be anything crazy. We see it go all the way up to here. Okay. So now that's that 15-minute fair value gap up here. 15-minute SIBI, all right? Sell side imbalance. All right, look how we barely, I'm going to zoom in super close. I'm going to highlight it for you. Barely trade into that. Look at that, right there. We just tap into that fair value gap, into that bearish breaker, and then look at the reaction downwards. Boom, 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 boom. It drops, okay? That is that bearish breaker, that unicorn. It's a very high confluence trade for me, very high confluence trade setup for me. Okay, so we trade up into it when we see us drop. So I would not, most likely you would not see me take an entry anywhere over here. Nowhere over here because I'm waiting for displacement. So notice how this 15-minute candle here at 9:30 a.m. did not displace the low. We wicked below here, but we still respected those lows and did not trade below. So I'd still be waiting for a displacement candle like this next one. That's that 15-minute displacement candle. That gives us that confirmation that this is a bearish breaker. And now we've actually created a unicorn because we have a fair value gap resting above. Okay, so now I'd be waiting for us to trade back into that breaker before I get an entry. So I would not take an entry anywhere over here. I'd be waiting. Possibly here could be a good entry because now you can also look for those fair value gaps that form after we've broken out of a breaker. Like look at that 15-minute. So that could be a good entry. You could have shorted that down, right? That could have been a good entry. But my more conservative approach would be waiting for us to retest or just to test that breaker, that unicorn for the first time. Okay, so that 15-minute SIBI, I'm going to actually say 15-minute unicorn. Okay, that's that unicorn, that fair value gap overlapping the breaker. Okay, so now what I'd be looking for is when price trades back into that breaker, right when it taps into that unicorn, that's my entry. Okay, so where's my stop loss going to be? Preferably, I'd want it to be above the unicorn, right? But look at this. This is obviously a big move. That's like 170 ticks. So on this type of trade, I would not have my stop all the way up there. But preferably, when we don't see this big of a gap, I would like to keep my stop above that fair value gap, above that unicorn. But what you can also do is if you do get an entry all the way down here, you can just keep your stop above the breaker, right? You can keep it at 50 ticks above the breaker. You can keep it at 55, 60 ticks, whatever you feel comfortable. And then if we do continue to trade up into that unicorn, you probably don't want to be in that trade as much anymore as if we're not respecting that bearish breaker block. But if we're wicking up into it and then we come back down, you still could be looking for that entry. Okay, so typically I'd like to keep my stop above the unicorn, above that fair value gap. But if it's too much risk, then I'll just keep it above the breaker block. Okay, so the other thing that we have to do is this is where the Fibonacci tool comes into play. So we're now looking again at point A to point B. Okay, so point A is here, point B is here. We're getting out that fib retracement tool. We're going from the low on point B, right, to the high of point A. And now these are our standard deviation levels for take profit. Okay, we can see how our first standard deviation, pretty good level of profit. Second standard deviation is perfect. It goes right into that volume gap that we saw down here. Notice how price trades into that volume gap and then came back up. And then ultimately, you see price drop all the way down, probably, to about 6, 7, 8 standard deviations, taking out those lows. Okay, so these standard deviations can be very good take profit levels. They can be good conviction or confluence levels for when you are looking for, maybe you're looking for a high, for a fair value gap, for an order block to take profit. When you see those standard deviation levels aligning with those PD arrays, that gives you that extra confluence and conviction and where to take out your profit, where to sell. Okay, so we have that breaker, that unicorn, and look at how much profit you could have caught on this trade. I mean, if let's just say you held down to the second standard deviation here and you sold everything at the second, that's 351 ticks if you were able to hold that trade all the way down. Right? Let's say you could hold it all the way down to fifth standard deviation. That's 852 ticks, right? So these are big rewards because this is a very big move. But yeah, like this unicorn model is probably my favorite entry model out there. It's that reversal model. It's so clear when you see it set up. It is so clear. It's a higher probability setup for me. When I see the setup, I'm almost always taking it as long as it's aligning with my higher time frame analysis and with our higher time frame trend. Okay, so if we're trading up into a 4-hour, a 1-hour, a daily imbalance order block, whatever that may be, and then I see a 15-minute breaker form, or a 15-minute unicorn, or an hourly unicorn, or a 5-minute unicorn, I'm looking to take that. My favorite time frame for this setup is the 15-minute. I think that the 15-minute offers the best unicorn setups in terms of risk to reward. Is very clear. I think the 15-minute is the best time frame for it, but you can also find it on every other time frame in the market. You could find it on the daily, on the 4 hour, on the 1 hour, on the 1 minute, right? But the higher the time frame, the more conviction you can have. But that 15-minute time frame, when it aligns with your high time frame bias, it is beautiful. It's a great setup. Personally, I love this setup so much. So that's that unicorn model, and that's how I use it. Okay, so that's just a bearish example, and obviously it would be flipped for the bullish, right? So if we're looking at a bullish one, let's maybe go try to find a bullish unicorn or breaker that we can look at for as an example. I would like to find a unicorn. So we'll see if we can find one here. I'm gonna go back a little bit. All right, so we can see one here. This isn't the best example, actually. Let me try to find a good example of a bullish breaker, a bullish unicorn. All right, it might take me a second to find a good one. Let's see, this looks like a pretty good one here. This looks like a pretty good one. Okay, so we are trending down, trending down, trending down. Okay, so now we form this low, this high, this lower low. Okay, so now this low right here, that's point A in a bullish breaker. This low is point A. Point B is going to be this high up here. Okay, that first high is our point B. And our point C is going to be that second low, that lower low that we form. Okay, so now what we're looking at is A, B, C. Now we need to see a displacement of this high right here. Okay, so we get that displacement right at this candle. We see us close above. We see us close above. Now that confirms that our bullish breaker is in play. So we're looking at that up close candle, highest up close candle, which is going to be this one right here on that point A to point B. So now that's our breaker. That's our bullish breaker right there. Bullish breaker block. Yeah, so we see that bullish breaker. All right, so now what are we waiting for? We're now waiting for price to trade back into that bullish breaker after we get displacement, okay? So we're waiting for us to displace the high. Notice how we come back down, we touch into that breaker, and then we expand, okay? We get some consolidation, and then we expand, right? So now the other thing that we're doing, remember, we got to use our Fibonacci retracement tool from that high to that low of point A to point B. We're looking at the standard deviations for take profit levels. Okay, pretty good take profit levels are kind of aligning with our highs, right? We can see this one went all the way up eventually to our fifth standard deviation and even more. Okay, so we're looking for that low, high, lower low, displacement of the high, trade back into that fair value gap. So this is not considered a unicorn setup. This is just considered a bullish breaker because we don't see that fair value gap entry anywhere on here, okay? We had a fair value gap down here, but we never traded into it. So this is just a bullish breaker. All right, so now let's say we were to get an entry here right when we touch into that breaker, right? Obviously, we're moving a lot of ticks, and these are higher time frame stuff, so we're not going to have the best risk management, but typically you would want to keep that stop down below. Again, these are more of like swing trades. On these 15-minute breakers, they're more like swing trades. We can see prices moving a lot of points on these trades. Okay, and if we broke it down into a smaller time frame, we could really look to sharpen our entries, right, and get our entries down to a T. Look, you could keep a 50, 60 tick stop, you know, and ultimately the reward, even if you just held to that first standard deviation, that's 415 ticks. If you held to that high, that's 274 ticks, right? If you held to that next high, that's 700 plus ticks, right? So these are nice swing setups off these bearish and bullish breakers that we're seeing. But ultimately, it's hard because you want to be able to keep your stop lower. So that's why you go down to the 5 and the 1 minute time frame to really dial in your entries. Once you see that 15-minute confirmation of that breaker block forming, that's when you're going to the lower time frame and you're really looking for those smaller fair value gaps, order blocks to enter off of inside of the breaker. Okay, but that's that bullish breaker pattern. We can see low, high, lower, low, displacement of point B, right, that first high. Trade back into the highest up close candle right here. From there, boom, we take off. We take off, we take off, we take off all the way to the highs until when we zoom out, we keep going, we keep trending up, we keep trending up, we keep trending up. And then look at that bearish breaker up here. That's the one we talked about here. Come down, sweep some lows, right? So that's an example of a bullish breaker block here. and it's an example of a bearish unicorn breaker up here. Okay, like I said, one of my highest conviction setups. I love these trades. I love them on the 15-minute. But that's what we're looking at in terms of our breaker blocks, in terms of our unicorn model.